Hey there, savvy home buyers and sellers. This is Jeff O'Leary, the Village Guru, Mississauga real estate broker, and welcome to episode 6 of the Coronavirus Real Estate Market Update. This update is going to cover the week of April 29th to May 5th, 2020. In this episode, we'll go over what's happened in terms of real estate, and we'll also investigate different housing styles to let you know the opportunities and challenges of both buying or selling in this market. So without any further ado, let's get into it. Well, it's week 7 of social distancing and the lockdown in Ontario. I've been following the news. Looks like cases are starting to slowly go down, and I'm hearing talk that businesses may soon start to cautiously and slowly open, which is very good news for our economy. I think a lot of people, we're at the point now, we've been inside a while. It's time to get going, and at least, maybe it might not be normal, but at least we can get back to some sort of doing things. So I'm hoping there. But we're not here to talk about that. We're here to talk about real estate. So first off, Toronto Real Estate Board did release their Market Watch report for the month of April. And as predicted, sales are down big time. In fact, Treb reported sales down approximately 67% compared to the same time last year. Now, in terms of price change, it gets a little more vague, and they keep comparing to the same time last year. And right now they're saying we're up slightly from the same time last year. However, we do know that prices went up a lot into this year and only started to come down after coronavirus started. So closer to home, let's look at Mississauga. First off, new listings are down 68% compared to the same time last year, and the number of sales are down 72% compared to the same time last year. Now, it's important to note that usually the first week of May, historically, there's a big boom in the amount of listings and sales because this really signals the start of the spring market. Things start to bloom, everything looks better, and those sellers that are looking to sell in the summer in order to start somewhere new in September, this is the time they're listing. So no surprise whatsoever in the environment we're in. So now we're going to get to the most important question all home buyers and sellers have, and that's, Jeff, what's going on with house prices? So again, just like in the previous 5 episodes, we're going to use the comparison of a semi-detached house in Mississauga between the prices of $600,000 and $900,000 because it's important that we compare similar properties in a similar area, or else the numbers don't really make sense. So when we look at the sale of a semi-detached in Mississauga for last week, which is April 29th to May 4th, compared to the first week in March, we notice that prices are down 4.8% from March. Now that's a little better than last week, and it keeps trending up very, very slowly, which is a good sign. In terms of sold to ask ratio, homes sold last week for 99% of asking price, which is up from 98% the week before. And finally, the average days on market clocked in at 21 days, which again is a pretty good days on market compared to a normal market. However, not as good as the hot market we've been in prior to coronavirus. So that's something to keep an eye on. Okay, so now we're going to look at semi-detached houses on our rolling graph, which we've been doing for the last couple of weeks, just to give you an idea of how inventory versus sales is going. And as you can see, since the middle of March, we saw a steep drop in both the number of listings and the number of sales. And since we've been in the month of April, the number of listings has actually been lower than the amount of sales in the area. And this trend has continued right in the last week. However, the only difference is the number of sales did drop slightly in this category, and the number of listings did start to rise. But we're still at a point where the amount of terminated and sold properties is higher than the amount of new listings on the market. All right, so now that we've gone through our weekly report, now we're going to do something a little different that I haven't done in the previous episode. This week, I've actually pulled the different stats for all the different housing types and actually found some very interesting things. So first off, here's a chart showing the sales versus active inventory for the month of April as reported from the Toronto Real Estate Board. The blue line represents sold listings during that time, and the orange line represents active listings. And right away, detached houses and condo apartments point out to me as areas of concern because there's a heck of a lot of active listings compared to the amount of sales going on. Now, when we get down to semi-detached townhouse and condo townhouse, the numbers are very level, and that's telling me we still have tight inventory in those segments. So let's explore this a little further. So this chart's going to give us a good idea of what's going on in terms of inventory in the market. Again, inventory is tied to absorption rate. And when you look at absorption rate, the important thing to remember is anything under 4 months is considered a seller's market. Anything from 4 to 6 months is considered a neutral market. And once you get more inventory, where it's over 6 months worth of inventory, that's when we get into a buyer's market where you're gonna see a downward pressure on prices. So when I look at the different property types, right away, detached and condo apartment are much higher than the other housing segments. Everything else, like semi-detached townhouses, they're still sitting under 2 months worth of inventory, which tells me conditions are tight, which means as buyers get back into the action, it's gonna force an upward pressure on prices. But because we see something different in these two categories, I think it's worth investigating a little further. Now, when it comes to detached houses, just as I've said previously, it's really hard to compare this segment just because in Mississauga, you might have a detached house that's $800,000 and you might have one that's $4 million, and they really don't have anything in common except for the fact that they're detached. So what I've done in this chart is I've actually broken down the sales to houses under 1.5 million and then houses over 1.5 million. And under 1.5 million is anything from an entry-level house up to a good family 4-bed executive home. Once we get over 1.5 million, we're getting into the luxury segment, and as you can see, there's a huge difference. As you can see with this split, houses under 1.5 million are still selling rather quickly and inventory's tight, and they're sitting at only a little over 2 months inventory. It's only when we get into the luxury homes that we see a huge amount of inventory, in fact, over 12 months inventory, which represents a severe buyer's market. And really, guys, in a market like this, luxury purchases that are not necessities, people tend to put them off. I mean, that's just the nature of the business. This chart explains it because when you take the average together, it looks like detached are not performing well compared to the other segments. But in reality, it's these luxury properties that are bringing this down and making the numbers look worse. If you're in the market for a regular detached house or you're selling a regular detached house, you're still in a good market. So if I modify the chart to show the difference between a luxury detached versus a detached under 1.5 million, you see that the ones under 1.5 million fall in line and are in a healthy range of still tight market conditions. Now, when we go back to the month's worth of inventory chart, the other sector that stood out to me was the condo apartments, which have also a high amount of inventory compared to semis and townhouses. So in order to make better sense of the condo situation, I broke down the sales in the last month into 1-bed, 2-bed, and 3-bed condos. And right away, that 2-bed condo segment sticks out to me. So the average 2-bed condo in Mississauga sold last month for $517,000. However, the average 2-bed condo currently listed for sale on the market in Mississauga is approaching $700,000. So that tells me there's a lot of luxury condos and newer condos that are sitting on the market for sale. Because the challenge was condos rose in price a lot in the last couple of years, but now they're getting to the point where they're the same as a semi-detached or even a small detached house. So a lot of buyers may be choosing to forego the condo altogether and go right into the next level of housing. Well, there you have it. I hope you enjoyed that quick little rundown of the different types of housing in Mississauga and how they're doing. Basically, if it's an affordable house and it's within the range of most buyers, it's still selling relatively quickly. Obviously, the number of sales is down, but market conditions are showing that our listings aren't skyrocketing up. And always remember, when we look at absorption rate, the most important thing to keep in mind is the amount of listings versus sales. If you start to see listings going up, while at the same time sales are going down and there's a big spread, that's when the risk of a downturn becomes more and more real. Well, I hope you enjoyed my market update. If you have any questions, always feel free to call or email me. I'm Jeff Valeri, the Village Guru. If you like this video, give it a thumbs up, subscribe to my channel, and share it with your friends. Have yourself a safe day.